All right, traders, after having 4 green days into 2023, I did end up having my first red day today. I'm going to be recapping the trades and going over the mistakes that I made towards the end of this video. We're going to start things off with the new updated price action analysis trading plans heading into tomorrow. Also, you guys need to be aware it's going to be a lot more volatile this week because CPI data is coming out at 8:30 a.m. on Thursday. That is something that I'm not going to be holding through. I'm going to wait for the big move to happen and then take advantage of the opportunities and new key price levels, which will be disclosed after Thursday when that occurs, after 8:30 a.m. So with that being said, in terms of the current updated price action analysis, as explained in this morning's video, the bearish zone, if this zone reacts bearish, it's going to try to sell off to 386 to 384. The zone was 388.36 to 387.86. At first, it was reacting bullish, so I stayed away from the put options because all it was doing was breaking above our key levels and forming green candlesticks. Absolutely no reason to buy puts. Then I ended up buying puts when the SPY went green to red and it formed this roof. Once it starts to form this resistance up here, I bought puts and then it retested, even cracked for a new low of day. And once it started to spike and form this wick, I was telling people, you know what, we should get out. Puts are up 10%. It's not looking good with this wick and this support, trying to predict that it's going to crack. And then as soon as I said that, a couple seconds later, SPY had a massive breakout. And then it had a pullback and it turned this previous roof in this previous closing price into support after it had a breakout and started bouncing. So once that occurred, I had to cut my loss. I cut it as quickly as I could and I got out right around here. With that being said, guys, when the previous closing price is reacting bearish like that, it's gonna try to crack support, but you want to scale out into support. Unfortunately, it was a very small channel of 387.85 to 387.20, so it was a smaller channel. Puts were up 10%, but you had to get out so quickly. It spiked as soon as it hit support, right? If you try to predict that support's going to crack, your risk is going to be that it goes back up to that previous closing price. And if you don't get out at your initial entry, then it's going to squeeze against you likely, and then you'll go from green to red on the trade, which is what ended up happening to me. Unfortunately, it was just one of those situations where it was extremely volatile and the move happened so quickly. Support did not crack. It formed the bullish wick. It triple bottomed at the lows, and then it had a breakout. But I should have gotten out a little bit earlier when I said I should have. I also should have cut it when it bounced off the previous closing price. When you see it flip, this roof breaks out and then it pulls back and it bottoms at this previous roof, forming a floor, breaking out, forming support, you have to get out. And I got out right around here at the 70, right when it had a breakout, right? So at least I cut it at that point for about a 40% loss. Now, with that being said, in terms of where we're overall at with the market direction, the bulls are trying to win this, man. They are trying their best to really win this. Your previous macro support on the SPY was right here at $390, and also this gap to fill above at 389.63. The SPY has consistently broke above those levels for 2 days now, and it has reacted as a support level. With that being said, the bulls are really going to try to take this, man. You could see right here, if this floor reacts as a floor, the next resistance level that the SPY is going to try to break out to would be right around here towards the highs on Monday, which was at 393.70. So the bulls are going to try to maintain bullish. They're going to try to continue to pump it. The new make or break level would be this $390.58 level. If that reacts bullish and holds, then we will see a retest of Monday's highs. If it goes green to red and reacts bearish, then the SPY will be on track for a pullback to about $390, which is make or break. If 390 cracks and reacts as a resistance level, then we will start to sell back off towards this 388.70 to 387.80 zone overall, right? So we're in a tough situation right now. The bulls are really trying to take it. They're turning this strong top high-end resistance into support, breaking above, into support, breaking above. The bulls are really starting to show their true colors, right? So we're going to see how it reacts at that 390.58 level. That's going to be the new make or break level. And that's the main level that I'm interested heading into tomorrow, is this $390.58 level. I'll also be keeping an eye on that $388 level. Those are my two levels that I'm going to be looking at heading into tomorrow. Now, if it does remain bullish, the next price target would be $393.70. If the SPY were to break above that and turn that into support, the next level would be 395.25, which is make or break. If 395.25 reacts as a resistance, we'll see a pullback to about $393. If it breaks out and reacts as support, it'll start to fill the gap. There's a gap to fill above at $399.40, right? And that'd be the best level for puts heading into this week, is that $399.40 level. So in terms of what is occurring, the bulls are showing their strength. They're turning the key. They already turned major resistance from last week's top of the channel, which was at this 386, into heavy support for multiple days. They keep trying to break out. And again, they're pushing above that key previous macro support in that gap previous resistance at 388 to 387.78, right? So the bulls are really trying to take this, man, and it is going to be make or break up here. What can flip the trend for the micro for a short-term pullback would be a crash under $390 for a nice pullback to about 389 to 388. So basically heading into tomorrow, I have two levels of interest. I have 390.58 make or break. If it reacts bearish, then puts. If it reacts bullish, then calls. I'm also keeping a close eye on $388 in this 388.70 zone. And then in terms of higher levels that I'm keeping an eye on, I'm mainly keeping an eye on this level right here, 395.25 and 399.40. So my lower levels that I'm keeping an eye on, 390.58, and then the lower zone of 388 and 388.78 make or breaks. And then on the higher levels, this is a gap breakout level. It's either going to fake out or break out at 395.25, and then there's a gap to fill above at 399.40. Those are my four levels heading into this week that I'm interested in potentially trading at, right? So I'm going to analyze if they react as support or if they react as a resistance, right? Obviously, for the lower levels, you're going to want to look for calls. For the higher levels, you're going to want to look for puts, right? So the lower levels that we're speaking of, those are more call opportunities, more buy and support opportunities. The higher levels are more put opportunities. Look for resistance, look for fake outs. That's my overall analysis with the SPY. And like I said, in terms of the mistakes that I ended up making today, so I was trying to identify if this, if this previous support right around here at this 388.38 can react as a resistance. If the SPY can go green to red and react as a resistance. I was looking in the pre-market and I was identifying, okay, it's already selling off. There's a good chance it's going to try to pull back at the previous closing price. And I was interested in puts because it was already reacting bearish at the previous closing price in the pre-market. And we were getting an overreaction to the upside. Once the market opened, there was no bearish candlesticks. There was no reason for puts. It was consistently breaking above the previous closing price. So I stayed away. Once SPY went green to red right here and it pumped back up and formed this red candlestick, I bought the puts. And I was well aware there was support right here. And if it bottoms at this support, it's going to spike back to the previous closing price. And if it touches the previous closing price and goes green, it's going to try to pump back up and break out, right? So I knew all of that going into the trade. And once I saw this red candle right here, I bought the puts. When it dipped back for a new low of day, I was up 10%. I told people, you should get out, you should sell, you should not try to predict that this support level is going to crack. And I also said it's forming a bullish wick, which is bullish. And unfortunately for me, I did not get out right away. And then this is just one of those unfortunate situations where it literally spiked $1 in like 40 cents in a single minute. I held through the spike, puts were down about 30%. And then it pulled back, and this was a very bearish candlestick here, so I felt that the previous closing price was going to crack, so I continued to hold my position. But one thing you have to understand is, even if it looks bearish, even if it did, pull back from that breakout, right? If it's forming a floor at the previous closing price, this is bearish, this is resistance, then it pulls back. Well, if it breaks out, pulls back and forms a floor and starts pushing higher, that's super bullish. And that means the bulls are going to win and they're going to try to run this. I knew all of that. I continued to hold a little bit longer, and then I got out right around here when it was at 70. So right before this nice little breakout, I managed to get out. With that being said, that was the first mistake. And then heading into power hour, I did a little bit over trading. I wasn't trading the best setups at the best prices. I had a very nice scalp on puts right around here for a 60% win. And then I ended up giving back those profits by continuing to scalp puts at this resistance level. Overall, I didn't find it to be an easy day to be trading. You can see the previous closing price was more of like the middle of the zone today. It wasn't the top, it wasn't the bottom. It was more difficult. It was more of the middle. Sometimes it's going to be the middle, but it's usually either the top or the low in most situations, depending on where the price is. But it was overall a choppy and sloppy day but the bulls ended up winning it. But it was not an easy day, man. I did not find it an easy day to be trading. I found this to be one of the more tougher days to be trading. You know, I didn't like the price action at all in SPY, and you had to be extremely quick and prepared for everything that was to occur, as always. But with that being said, man, those were the overall mistakes that I ended up making today, right? So in terms of the account, I did have a bigger red day. I ended up losing 13K on the day. In the morning I lost 10K, and then I ended up having a very, very nice trade, made about 5K on the second one. And then after that, I started over trading and I gave it back, and then I finished down 13K in total. But with that being said, guys, I'm going to scale back a little bit in size, and I'm just going to continue to trade the best setups at the best prices. I did a little bit of over trading, and I was trading just price action into power hour, which is why that didn't work out too well. And I just got to stick to the rules and just stick to the strategies, and it'll be completely fine. So this was a good reset, and I'm going to keep it going. In terms of year to date, I'm still up 2023, a little bit over 8K within the trading. So with that being said, guys, I will see you tomorrow live at Market Open. If you do want to be a part of Trader Society, that's going to be the first link down below in the description. More information is there. You can get started as soon as you join the program.